could see some shifts in 2025. Things were very sluggish through last year, especially in the GTA's condo market, which is at an almost 30-year low for sales, but interest rate cuts and some new mortgage rules could set the stage for some change. Talia Ritchie explains.
When looking at the real estate market right now, analysts say the outlook depends on the type of housing. If you're searching for a tiny box in the sky, there's no shortage of those.
Those units, we have a ton of inventory. Not a lot of people buying them because many of those fall into this sort of category where they're a little bit too small for people to live in, to want to own or occupy them, and investors aren't buying them. And I think this is one of the problems with Canada's housing crisis. This is how Canada filled our rental supply. Rather than building permanent rental housing, we built a lot of tiny condos bought by investors, which has effectively shut out families out of the downtown core.
The federal government changed the mortgage rules in 2024 to make it easier for buyers to enter the market. It expanded eligibility for 30-year amortizations to all first-time homebuyers and all purchasers of new builds, and also increased the $1 million price cap for insured mortgages to $1.5 million. That means buyers can purchase a $1.5 million home with less than 20% down.
So the market between 1 million and 1.5 million is going to be really robust for 2025. The other thing that's also going to help the market is the intention of the reducing of the interest rates going forward.
The Bank of Canada lowered its interest rate by 50 basis points to 3.25% in December, marking the fifth consecutive reduction since June. But those cuts haven't made big waves in the market.
It does take a little bit of time for the dust to settle and the people to realize, what their purchasing power is going to be. I think we're going to see at least a 5 to 10% increase in prices over the course of 2025.
I think what we typically will see is that spring market is always the indicator of what's going to be happening within the rest of the year. So I think what we're going to start to see is a little bit of pent-up demand. People are starting to, lower prices, which means buyers are starting to get a little bit excited about the marketplace and starting to look a little bit more. So I think we'll see a little bit more of that, I guess, increased activity.
Experts say the market has slowed down and 2025 could see a bit more negotiating room for buyers. We likely won't be repeating the crazy bidding wars that we saw during the pandemic anytime soon.
That frenzy was absolute craziness, and we said it when it was happening, that it was really, you would set your phone down and within 5 minutes you would have 5, 10, 15 showings booked on one property. Those expectations can't be there anymore. The expectation has to be that the market has come back down to earth.
Some people we've seen who are worried about, not just the relationship with the U.S., just economic uncertainty generally in Canada. If they're worried about job stability as they move into 2025, people are going to sit on the sidelines and wait.
Now, there is some good news for renters, which make up about half of Toronto. Average rental prices hit a 28-month low in November, mostly because there's a lot of inventory right now. And that trend is expected to continue into 2025. Talia Ritchie, CBC News, Toronto.
We'd like to thank the public